Our radar is InoxGFL Group. It's on our radar today. The group includes companies like Gujarat Fluoro, Inox Wind, and the recently listed Inox Green Energy Services. Now, the group has set plans for a debt reduction as well. They are on a significant fundraising spree in the last couple of weeks to reduce their group-level debt. We have Devansh Jain, the executive director at InoxGFL Group, who's joining us now to talk about that. Devansh, thanks a lot for joining in. I remember speaking with you when the stock listed as well. Tell us a little bit about where things have progressed to in terms of the debt reduction plans. What are the steps that you take? And, by the end of, say, FY24, are you looking to become debt-free at the group level?
Hey, good afternoon. Yes, I recall very well our conversation when Green listed. Happy to be back on the show. So I think over the past fortnight, we've taken significant action. When the realignment in the group took place, we had set out a clear goal to deleverage all our operating companies. And we are happy to announce that over the past 10 or 12 months, we've taken significant actions, including the IPO of Inox Green and recently the fundraise at the fluoro level so as to clear off debts. So just to take you through the larger piece, what we've done is over the past fortnight, we've raised about 1,500 crores across group companies. 720 crores has been raised by the promoters by selling approximately 2% of our holding in Gujarat Fluoro to raise approximately 720 crores. And that net of costs and taxes led to an infusion of about 623 crores by the promoters into Inox Wind to further strengthen the balance sheet of Inox Wind as well as take off interest-bearing advances which were prevalent at Inox Wind. And in turn, Inox Wind used that 623 crores to pay off the advances which Gujarat Fluoro had given to it. So we've, with one stroke, cleared off the debt of 620 crores. Besides that, there was this corporate governance overhang which investors did not like, and we had this inter-corporate relationship which we've kind of addressed to kind of cleaned up by way of doing this. So we've cleared off debt, we've cleared off the inter-corporate corp governance issue which investors did not like. Besides that, obviously, Inox Green raised 740 crores in the IPO, which is primarily being used towards repayment of debt. So if you look at it now, overall, we've cleared off close to net of expenses and taxes about 1,350 crores as a group across our operating entities. From a leverage perspective, I think I would tend to believe the group now is down to about 0.15 in terms of leverage. And your question with respect to FY24, I think we have a very clearly stated goal. We intend to become a zero net debt group very, very rapidly. So I'm not sure whether it's going to take us that long, but hopefully in the next 2 to 3 quarters, we should get there.
Next 2 to 3 quarters, you'll become zero net debt on the group level. You also spoke about how you're selling 2% of promoter holding to raise 720 crores. Any more of promoter stake that would be sold to raise money in the near future?
No. We don't intend to sell any further stake at the Gujarat Fluoro level.
Okay.
I think we've completely cleaned up the corporate governance issue which prevailed by selling this 2% to pay off all the advances, net of some capacity which Gujarat Fluoro is setting up under the wind segment. We've cleared off all the advances which had to be cleared off at the Gujarat Fluoro level. So there would be no promoter sale at the Gujarat Fluoro level.
Okay. Can you explain to us what further fundraising you're looking at a group level? It might not be promoter stake sale, but any other non-core assets, anything else that is on the cards, and the timeline and the amount you're looking to raise?
So effectively, I mean, if you look at Fluoro now, we're down to about 300 to 400 crores of net fund-based borrowing, which, given Fluoro's operations are extremely strong and we're on a very, very significant run rate. I think that's something which should be able to clear up by Q1, Q2. Coming to sale of other assets to raise capital, at the Inox Wind level, we have certain warrants issued to 2 non-promoter entities, Samina Capital as well as two large investors. That should reflect in about 200 crores of infusion within the March quarter. So that would be used to pay down debt. Besides that, we have 50 megawatt SPV still left under consolidated Inox Wind, which would pair off about 300 crores of borrowing. So effectively, we've sold 4 SPVs recently, 3 to Adani, 1 to Torrent. This is the last SPV under the consolidated Inox Wind balance sheet, which we expect to sell in the near future. So these two things, the warrants plus the sale of the SPV, should clear off approximately 500 odd crores from the group level debt as well.
Right,
I mean, that
Devansh,
would
there are...
make us at about 300, 400 crores of borrowings at the wind level, which we believe from internal accrual should get cleared off in the coming financial year.
Okay, so there are a lot of numbers which you've thrown at us. Just tell us, just simplify it for us. In each of your entities, what is the current debt? How much are you probably going to look to reduce it on an absolute basis, and by when?
So from a Gujarat Group perspective, we're now down to approximately 350 odd crores of term borrowings. We believe this should get squared off in the next 2 quarters. Coming to Inox Wind consolidated, our debt would be approximately 950 crores at this point in time, and this will get paid down by approximately 500 crores in the next 2 quarters. This would be done by way of 200 crores coming through warrants and 300 odd crores going away by sale of a 50 megawatt SPV. So that would bring the consolidated wind business down to approximately 400 to 500 odd crores of borrowings.
Okay.
And that we intend to clear off over the next financial year by way of internal accruals.
Okay, got that. So that's on the debt front, which is great to hear, of course, from an investor standpoint. Wanted to talk a little bit more about the business as well. Gujarat Fluoro has forayed into the EV battery segment, and that's a space that is, growing in a big way. Just tell us a little bit about the opportunity there and what kind of growth do you see?
I think over the past 12 months, we've consciously moved away towards high-end advanced fluoropolymers. I think we continue to invest on that vertical. Besides that, we're setting up one of the largest battery chemical complexes in the country. I think we're very, very bullish about that venture. I think our first plant should come up over the next 3 to 4 months. And, we expect to see hockey stick growth in that venture, given, whatever number you talk about on the EV side of things, the numbers just keep going through the roof as we keep moving forward. Having said that, I think it's important to note that the battery chemical complex we're talking about is something which is unique to us from the India perspective. And we're one of the select few companies globally to have access to this technology. I think that's a business where we should be investing close to 3,000 to 4,000 crores from internal accruals over the next 3 to 4 years. And that could be a vertical which could, frankly, even take up more capital as we move forward. I think it's a very high margin business, and we're very, very excited about that opportunity.
Okay, all right, Devansh, we're going to leave it on that note. Thanks very much for joining in and detailing the fundraising plans, the debt reduction plans for the group level of InoxGFL. We need to take a short break.